Monthly update on Indian economy, February 2025. Hello and welcome to India Business Insights. In this update, we will provide an overview of India's economic situation, covering recent trends and developments. We will discuss how GDP growth, inflation, and employment rates are shaping the country's economic landscape. Let's get started. GDP. As of February 2025, India's GDP growth remains robust, with projections indicating a strong performance for the fiscal year 2024-25. According to a report by the World Bank, India's GDP is expected to grow at a rate of 6.7% for FY 2024-25, driven by a rebound in private consumption and investments. The National Statistical Office (NSO) has not yet released the fourth quarter GDP figures, but preliminary estimates suggest that India will maintain its position the fastest growing major economies globally. The RBI's Monetary Policy Report, released on February 6, 2025, highlighted the resilience of India's economic growth, citing a GDP growth rate of 6.5% for the current fiscal year. In terms of sectoral contributions, the manufacturing sector is expected to grow at around 7%, while the services sector is projected to expand by approximately 8%. This growth is supported by a stable industrial production index, IIP, which showed a moderate increase in January 2025. The World Economic Outlook by the IMF, released on January 30, 2025, also underscores India's economic resilience, projecting a GDP growth rate of 6.9% for 2025. This positive outlook is further reinforced by India's strong fiscal management and strategic policy interventions aimed at sustaining economic momentum. However, global economic uncertainties and inflationary pressures could pose challenges. What steps can companies take to stay ahead? Strategic investments and a focus on productivity may be key. Export-import. On February 17, 2025, the latest trade figures were released. The trends reported were: export growth. Total exports reached $74.97 billion, marking a significant increase, though merchandise exports decreased to $36.43 billion from $37.32 billion in January 2024. Non-petroleum exports grew by 14.47%, driven by a sharp 78.97% increase in electronic goods and a 21.46% rise in pharmaceuticals. Import growth. Total imports were $77.64 billion, up by 12.98% compared to January 2024. Trade deficit. The trade deficit for January 2025 was $2.67 billion, with a total trade deficit of $22.99 billion, a 24.85% increase year on year. Sectoral performance. Key sectors driving export growth included electronic goods, which surged by 78.97%, and pharmaceuticals, which increased by 21.46%. Non-petroleum exports also grew by 14.47%. Looking ahead to February 2025, estimates suggest continued growth in exports, driven by government initiatives like the Export Promotion Mission. This mission aims to boost exports by addressing non-tariff barriers and targeting new markets, aligning with the Union Budget 2025's emphasis on exports as a key engine of growth. The figures also suggest a significant diversification in the export basket. Despite challenges such as global economic uncertainty and logistical issues, India's export sector is expected to remain resilient, supported by strong demand for sectors like electronics and pharmaceuticals. The government's focus on enhancing export competitiveness through schemes and infrastructure improvements is likely to support export growth in the coming months. The depreciation of the rupee throughout the year has made India's exports more competitive in foreign markets, which could further boost export performance in February 2025. IIP. The Index of Industrial Production (IIP) grew 3.2% in December 2024. Sector-wise, mining up 2.6%, manufacturing up 3%, with electrical equipment surging 40.1%, Electricity, strong growth at 6.2%. Meanwhile, the HSBC India Manufacturing PMI for January 2025 hit 57.7, the highest since July 2024, signaling strong factory output. Implications for businesses. Manufacturers are benefiting from rising domestic demand and global outsourcing trends. But with raw material costs fluctuating, will profit margins hold steady? Supply chain efficiency will be key. Looking ahead to February 2025, projections suggest a cautious optimism. The government's initiatives, such as the Production Linked Incentives (PLI) program, are expected to enhance manufacturing competitiveness and increase its contribution to GDP. Additionally, the focus on infrastructure development and strategic investments is likely to support growth in the manufacturing and mining sectors. CPI. In January 2025, India's Consumer Price Index (CPI) inflation rate stood at 4.31%, marking a significant decline from 5.22% in December 2024. This drop was primarily due to a sharp reduction in food inflation, which fell to 6.2% from 8.39% in December. The decrease in food prices was particularly notable in rural areas, where inflation declined to 4.64% from 5.76% in the previous month. Urban inflation also decreased to 3.87% from 4.58% in December. Vegetable inflation, which had been a major contributor to food price increases, dropped significantly to 11.35% from 26.56% in December 2024. These trends highlight the easing of price pressures across the economy, providing relief to households. The CPI data for January 2025 was released on February 12, 2025 by the Ministry of Statistics and Program Implementation. This report emphasized that the overall inflation rate was the lowest since August 2024, reflecting the impact of seasonal factors such as the winter harvest on food prices. While sectors like housing and healthcare continued to experience upward pressure, the decline in inflation was welcomed as it signaled a more stable economic environment. The reduction in inflation was also influenced by government policies aimed at enhancing agricultural productivity and improving supply chains. Looking ahead to February 2025, it is estimated that inflation may remain stable or slightly increase due to ongoing economic factors. The easing of food inflation in January was largely seasonal and may not sustain in the coming months. Reserve Bank of India will closely monitor these trends as it considers monetary policy adjustments to balance growth and inflation. The government's initiatives to enhance agricultural productivity and improve supply chains are expected to play a significant role in stabilizing food prices, which are a major component of the CPI basket. Furthermore, the impact of global economic conditions, such as changes in oil prices and trade policies, could also affect India's inflation outlook. Could the Trump's insistence on reciprocity of tariffs and access to Indian markets impact agricultural prices for crops such as soya and maize, amongst others? Foreign exchange reserves. As we look into the foreign exchange market dynamics for February 2025, it becomes clear that the Indian rupee has experienced significant fluctuations against the US dollar. On February 10, 2025, the USD/Indian rupee exchange rate reached a high of Rs 88.488, marking one of the highest levels in recent months due to weakening fundamentals and global economic pressures. This peak was followed by a stabilization effort, with the rate closing at Rs 86.639 on the same day. Throughout February, the exchange rate continued to fluctuate. By February 20, 2025, the USD/Indian rupee had stabilized at Rs 86.470, reflecting efforts by the Reserve Bank of India to manage liquidity and support economic growth. The average exchange rate for the month hovered around Rs 86.51, with a high of Rs 88.1 and a low of Rs 85.10. Looking ahead, projections for the remainder of February 2025 suggest continued volatility. The RBI's interventions in the foreign exchange market aim to stabilize the rupee, but global economic uncertainties and domestic challenges may influence exchange rate dynamics. While companies may do their own evaluation or consult specialist advisors, is it perhaps the time to relook at the hedging strategies? Are they adequate for these volatile times? Mahakumbh 2025. The Mahakumbh Mela 2025, held in Prayagraj from January 13 to February 26, has emerged as a significant economic driver for India. This 45-day event is expected to generate a staggering business turnover of rupees 3 lakh crore, surpassing initial estimates of rupees 2 lakh crore due to unprecedented attendance. By February 19, 2025, over 56.75 crore devotees had participated, far exceeding the projected 40 crore pilgrims. The economic impact of the Mahakumbh Mela is multifaceted, benefiting various sectors such as tourism, hospitality, infrastructure, and retail. The Uttar Pradesh government has invested rupees 7,500 crore in infrastructure development, slightly higher than the rupees 4,200 crore spent during the 2019 event. This investment has improved roads, railways, airports, and lodging facilities, enhancing the state's tourism infrastructure and generating revenue of around rupees 40,000 crore. The event has created a substantial number of temporary jobs, with estimates suggesting over 1 million employment opportunities in sectors like construction, hospitality, transportation, and event management. Beyond Prayagraj, neighboring cities such as Ayodhya and Varanasi have also seen a boost in economic activities, benefiting from pilgrims visiting these religious destinations. From an economic perspective, the Mahakumbh Mela is not just a religious gathering but a transformative force that sets a new benchmark for India's trade and commerce. It highlights the deep connection between faith and commerce, underscoring the strength of India's traditional economy. The event's global appeal, attracting over 1 million foreign tourists, positions India prominently on the world stage, fostering greater interest in India as a travel destination. While recently the RBI has signaled easing in monetary policy by reducing the policy rates by 0.25, will this continue as the global inflation outlook remains unchanged? Everyone is hopeful of solution to the Middle East crisis and the Ukraine-Russia conflict. How will this play out? Will this bring back growth to the global markets? How do Trump's policies, which include reciprocity in tariffs and the market access, impact the Indian economy? Meanwhile, since the demand slowed down since the festival season and weak government spending for almost 3 quarters now, the stock market performance has been very weak. We have done multiple videos with special budget coverage. However, the stock market seems to be unimpressed. It has fallen significantly even after deduction of the individual tax rates, particularly in the lower brackets. So, how will the market react? For this and more, please keep track of the monthly update on the Indian economy. That's all for today. Thank you for watching. We hope you found this update on India's economy informative and helpful. If you have any questions or need further insights, feel free to reach out. Don't forget to subscribe to our channel for more updates on India's economic trends and developments. We look forward to bringing you more insights in the future. Stay informed, stay ahead.